But I think overall, the bottom is in, and now is a great time to acquire physical metal. And then if you are interested in the exploration or mining phase of it, then look at that as well.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Kelvin Burton, the Investor Relations Person of American Creek Resources. Kelvin, thank you so much for joining us today.
Hey Elijah, it's great to be back on Miles Franklin.
Definitely. And I wanted to have you back on to really get some updates on your thoughts on the gold and silver markets and the mining space, because I know also the Sheckmans are shareholders of American Creek Resources. So we really wanted to get an update on that as well. So to start off with the gold and silver markets, what is your perspective on this long pullback we've been seeing? Really, if we have to go all the way back, kind of to August, we've seen quite a big pullback.
That's a good point. It doesn't go all the way back to August, and like a lot of other stocks, ours kind of tracks with gold, and so it's a popular topic amongst shareholders and a lot of people in the industry. And it's been a really interesting beginning for 2021. Apparently, gold is having its worst first quarter in 40 years, and yet you have Wells Fargo calling for $2,200 gold this year. At the exact same time. And I think that is because a lot of people are recognizing that pullback, as retracted and as deep as it was, is something that's coming to an end here. And they're expecting precious metals to start moving back the other direction. One of the reasons why I like to be interviewed here at Miles Franklin is I think you have a very intelligent customer base that you work with, and in part because you guys do a lot of good work at informing them. But I bet a lot of them are also Austrian economic theorists or that type of thing, and they understand the big picture when it comes to gold. And of course, that big picture I agree with as well, and that's the fact that you just can't print money into oblivion and not have that take a very serious effect on something that's real, which of course is gold and silver in this case. And so in the big picture, I really do see this as a pullback. I view it kind of like a bow. The harder it pulls back, the harder it's going to go. I'm not the great prediction of that, but if you want technical details and that type of thing, I think a guest that you had on just a couple of weeks ago, Ronald Peter Stofferle, is the expert in that field. I really enjoyed that video. If any of you haven't seen that one, go back, watch it. Of course, he's one of the co-authors of probably the best gold report in the industry, In Gold We Trust, by Incrementum AG. And we look forward to the new report coming out in just a couple of months. But Ronnie has just recently mentioned the fact that he said, I think the quote was, we're at the beginning or the dawn of a new golden decade. And so he's really seeing this as the tides coming in. There was a weight ratio of about 50 to 1. And that would be really quite something, Elijah, if that was with our current gold price of $1,700. But if we're talking, 22 or 2,300, like the two different predictions I just gave, that would be really quite something for silver, wouldn't it?
Definitely. And regarding the gold and silver markets in general, one of the signs that you're seeing is that there are a lot of mergers and acquisitions going on, and that is a sign that the producers are actually seeing this as the bottom. Can you expand on that?
Sure. And this is the part I like, because you don't have to be a rocket scientist to understand it. And obviously, the producers, they typically will try and acquire at the bottom of a market and like any other type of industry, and try and acquire their stuff at as cheaply as they can. And so M&A is always one good indicator. And, just looking at this last month, Elijah, it's been really quite something. I'm just going to read off a list of ones that I've noticed. There's probably a lot that I haven't. And they range in size up to about a $500 million acquisitions, and all over the place. So some in the Yukon, some in BC, Quebec, Nevada, Central America. Let me just read you a couple of these here. And again, these are all in March. So first, Majestic Silver acquired Jarrett Canyon. Agnico Eagle acquired TMAC Resources. Eldorado Gold Corporation acquired QMX Gold Corp. Troleus Gold acquired Urban Gold Minerals. Gran Colombia acquired GoldX. Evolution Mining acquired Battle North Corporation. Golden Predator acquired Viva Gold Corp. And Newmont acquired GT Gold up in the Golden Triangle. So that's quite a list. But I'd like to actually talk about that last one specifically, and that was about a $500 million deal. And the reason why I want to talk about that one, but partly it's actually the GT Gold is a neighbor of ours up in the Golden Triangle, which is right by the Alaskan Panhandle in British Columbia. And the only difference is they're a little further up the highway from the shipping port. So there's a shipping port there, and we're about 150 kilometers down a highway from that, and they were about 300 kilometers down the highway. But same highway, same area, same great rich mineralization that's taking place up there. And what I think is neat or unique about this particular situation is that they had actually done, GT Gold did a deal with Newmont, I think about close to 2 years ago now, and Newmont acquired 20% of that project. And Newmont actually had some of their guys working with them in the expertise that they have, which was very beneficial in terms of developing this project. So what's unique about it is that there's really nothing that Newmont didn't know about the project that they just kind of found out about and thought, hey, we should acquire this, right? They've had a very good insight as to what the potential value is and everything else of the project, but they decided to pull the trigger here this last month. And I can't speak for Newmont, but from my point of view, is that certainly one of the biggest contributing factors had to be the fact that, look, if we're going to wait 3 months, 6 months, a year, that they're going to be paying more for it. And a big part of that, Elijah, is the fact that it looks like the bottom's in for gold. And so while I might not be the expert, I can look to the experts like Newmont or this other whole list of companies that are here. And I can say they think that the bottom's in. And that's always a good indicator for me and for your people that buy from Miles Franklin that now's a good time to get gold because it's probably going to be going up from here. And again, I can't call any specific number or date. We might go down from here, but I think overall the bottom is in, and now's a great time to acquire physical metal. And then if you are interested in the exploration or mining phase of it, then look at that as well.
Definitely. And if you can expand on that, the kind of the different reasons people should invest either in the physical metal or the mining stocks. There's definitely different goals people will have if they invest in precious metal, physical metal, or the mining stocks.
There definitely is. And I think the first place is what gold has always done, and that is a hedge against inflation, or it's your insurance policy is really what it is. So I think that really needs to be in place first, and make sure that you can retain the value that you have in your investments. And there's a lot of, well, going back to Austrian economic theory again, there's reason to be concerned, obviously, not only with United States, but in the country that I live in, Canada and Europe, and really across the world, when it comes to instability within marketplaces and governments and what they're doing and so forth. So I think gold is that reassurance there. It is interesting, Elijah. My wife was just reading a book going back to Poland when Russia owned half of it and Germany owned half of it. And this was a Jew living in Poland. And my wife wanted to read me this part because the main character in the book, he would hide gold down along the river at nighttime to be able to feed his family. And he said, the worst circumstances in the world, and here I am, I'm a Jew, kind of the worst, situation for them. And yet he says, I can always buy food for my family and take care of them because I have gold. So that's kind of a specific example of why anyone would want to ever have gold and silver. And at this time, I think it's just a good time to buy as far as your price and also just the instability in the marketplace. As far as making money or becoming profitable and that type of thing, that's where you start to have foresight into the actual gold market itself. And we've talked about this before, how the ounces in the ground are drying up. They're being produced far faster than they're being discovered. And especially when it comes to big discoveries and that type of thing. And so when you're investing in a producer or an exploration company, that type of thing, it's really more so for a return. And going back to the Shechtmans, that's why they invested in American Creek, a number of years ago. It's turned out really well for them so far. I think they had really good insight. And it'll actually be a lot better in the future as well when we start discussing why in terms of American Creek specifically. But they are different roles. One is to actually, as an investment to have it go up and to gain more wealth. In fact, David actually said it best, I think. So as we all know, he's someone who acquires physical metals. And he said, his goal with American Creek was he has a price in mind that he thinks it's going to go to because he sees the vision of how big this could be. And they said, eventually I'm going to take that and then buy more physical with it. So he's covering both sides, and it's just not a bad strategy to do.
And getting into American Creek Resources itself and also the project Treaty Creek, if you could expand on that, because I know you recently came out with Treaty Creek resource calculations, if you'd like to talk a bit about that.
Oh, I'd love to talk about that. Just an absolutely fantastic resource calculation, a maiden one, so the first one. Before I get into that, though, I should mention that Treaty Creek is a joint venture. And so the operator and owns 60% of the project is Tudor Gold. And then American Creek and Teton Resources have a 20% fully carried interest until a production notice is given. And so it's been Tudor Gold that's been working on this. In the last 2 years, they've had just a fantastic geologist named Ken Conkin, and I'd love to get him on here at some point with you. But he has had a ton of success. He just finished putting the Brucejack mine, or was a key element in putting the Brucejack mine by Pretium into production just south of us. And we're part of this big system with Pretium and with Seabridge and Treaty Creek. And so our initial resource calculation was 19.4 million ounces gold equivalent of measured and indicated, and another 7.9 million ounces gold equivalent of inferred. So a total of about 27.3 million ounces. That's one of the largest gold deposits that's actually been found in decades, and it's getting hard to find those types of deposits. So we're really thrilled about that. And one of the really key things, Elijah, about it is that it's open in all directions. So what that means is that we can kind of keep drilling in any direction, including at depth, and it just keeps going. And so we really don't know how big this is. That's an incredible number to begin with, but it could be much bigger than this. The geophysics is showing that potential to do so. And so we think we're just getting going on this with that kind of number for initial resource calculation.
And what are some of the plans for 2021 for Treaty Creek?
Sure. Maybe I should explain this part of it because it does, it's important in understanding what the plans are. So we're in this large geological system called the Sulphurets hydrothermal system. And what it is it's a series of deposits. And each of these deposits are world-class deposits. And so it starts in the south with land owned by Seabridge and by Pretium. So we know about the Pretium's Brucejack mine. In the case of Seabridge, it starts with the Kerr deposit, then the Sulphurets, then the Mitchell, hence the KSM acronym, the Iron Cap. And these are all about 2.5 kilometers to 3 kilometers apart from each other. And there's this really strong sequence. And then that's where the border is, where Iron Cap is. And then about 5 kilometers away from that is called the Goldstorm. And that's where this resource calculation has come from, is on the Goldstorm. And so the plans for this coming year is to continue to expand the Goldstorm. So one of the things is to move the inferred, so about 8 million ounces inferred, over into measured and indicated, because that's what you really get paid on, is the M&I. And then they think they can do a lot of that, which is a lot of that 8 million, which is very encouraging. And then, of course, we don't know where the edge of it is. So Ken Conkin and Tudor will be stepping out from there and going further north and east and south and to depth, and just really expanding on this. So this could really be something really quite significant. And there's one area in particular on the Goldstorm that's quite of significance, and that is the 300 zone. And really all that is, Elijah, is the richest part of the entire deposit is in the top 300 meters, starting really close to surface for this. And that's excellent, because that means that it gives a potential for open pit type of operations, which are the cheapest, for CapEx and OpEx and that type of thing. And it also means that you're getting your rich stuff first so that you can pay off your CapEx much quicker. And so it allows for production much better than if your richest stuff is down deep, or maybe just in a really narrow channel that's going deep. And so we're very fortunate to have that. So the Goldstorm is one of these, and then Ken thinks that there's actually one on each side, as in potential for another deposit on each side of it. So the one closest to the Iron Cap, or going south, is the one I'm going to talk about, and that's called the perfect storm zone. So instead of the Goldstorm, it's the perfect storm. And that's because it really is, from a geological standpoint, it really is exactly where it should be in this sequence of deposits. As Ken likes to call them, a string of pearl, just really big pearls. And so they want to look at that one. It's sitting in the exact spot that it should be geologically. It's right along the Sulphurets thrust fault, which all the other deposits in this system are along. It's right along what's called the Kaiba red line of discovery, which is really just kind of a contact between two foundational rocks, volcanic and sedimentary, and that's where a lot of these big deposits, including all the ones in this system, are located. It has some really specific geology I'm not going to get into in this interview, but it has a couple of different geophysical anomalies on there as well. One's called a magnetotelluric survey, which has been useful for really all of these deposits along this system. And it has an overlapping magnetic high, which in this particular case, Ken thinks is significant and is representative of the potential size of this. So the perfect storm looks like it could be at least as big as Goldstorm, if not bigger. And they were able to just test the edges of it last year because of permitting. They're allowed to go into the whole thing this year. And so they'll be expanding on Goldstorm, but they're going to be testing the perfect storm as well. So this thing really has potential to become incredibly big is what it is. And one of the most significant things about it is the cost that they have for finding all this gold.
And if you can expand on that, because that's a big part of regarding mining, is how much does it cost to actually, for every ounce you get, right? So can you expand on that?
Yeah, sure. And maybe I'll just quote Pierre Lassonde. And just for those of you who don't know who he is, he was the former president of Newmont. He sat on the World Gold Council. He was the co-founder or starter of Franco-Nevada, which is a $23 billion royalty company. And he's the chair emeritus of that company right now. So he knows. He's been around forever, and he's an expert in the field. And there's 3 different interviews that he's had recently, and he touches on that. And the 3 different topics that he talks about are, one, the fact that these large deposits just aren't found anymore. 20 years ago, he was asked if there would ever be another 50 million ounce deposit of gold. And he said, yeah, I think there will be, but since then there hasn't been. And so it's, he's looking forward to it. He's optimistic for the future, but he said even 15 million ounce deposits are just so incredibly rare to find. And along the same note, he mentioned in a different interview that he thinks that in this environment of M&A that we've already talked about, and as gold becomes more scarce because it's being produced faster than it's being discovered, is that projects from the 1 to 3 million ounce range will get par for what they have. 3 to 5 million ounce deposits will get a bonus, and 5 to 10 to 15 million ounce deposits will get bidding wars on them. And so that bodes well for us right now, but and even more so in the future. But going back to the comment about costs, he was asked in one of his interviews, and they said, "What's the single most important thing that a company can do to improve its shareholders' value and equity in the project?" He said, the best thing that any company could do is to lower their cost of discovery per ounce. And so he talked about 20, 30, 40, dollars per ounce USD is kind of the range that a lot of companies are in. And if you're more than that, then that's not so good. I looked it up and I found a report from a couple of years ago that said that $42 USD was the average cost per ounce in the ground. In this particular case, because Treaty Creek is so unique in the sense that it's just so consistent. It's so big and so consistent. And the guy that we have running it, Ken Conkin for Tudor Gold, he's spent decades in the Golden Triangle and almost a decade right next to us. He knows the system really well, and he's been extremely efficient in drilling this thing. And so he just had an interview a few weeks ago, and he said that his costs are about $1 an ounce, opposed to 42. It's about 1/50th the price, and a couple of qualifiers there. That's the measured and indicated. So that's the 19.4 million, not the 27. And he said he spent about, I think it was around just over $18 million, something like that, to be able to find that much gold. And so it's pretty incredible, actually. And that's also Canadian. So it's about 74 cents USD, something like that. So he had this incredible statement on his last interview, and this is one of the reasons why I want to have him come on and talk to you. Is he said, "Give me $30 million, and I'll give you 30 million ounces of gold." That's a crazy statement, because there's not a lot of people out there who can actually say that they can discover it at that price. But who else is really confident that they can go out and get 30 more million ounces of gold, especially at that price? It's a crazy combination between, really cheap acquisition along with just incredible blue sky. And that's because we happen to be in, the richest system within the Golden Triangle, which is one of the richest areas in the world for mineralization. Now, one of the beautiful things as far as American Creek is concerned is because we have a 20% fully carried interest, that means our shareholders are actually at $0 per ounce. But it's so critical for us to have such a great partner on such a great project that can have that type of cost and that type of potential. We're so excited about where this is going and the value that it's going to add to the shareholders.
All right. Well, Kelvin Burton, thank you so much for your time today. And it'll be great to continue to get updates on where American Creek and Treaty Creek is going. And before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Sure thing. One last thought is, since we spoke last, the company actually split in two. And the new company is called Stinger Resources. And I'll just tell you about one project since we're short on time here, and that is up in the Golden Triangle as well. In fact, it's only 15 minutes from the shipping port in Stewart to the Adit. It's a past producing mine. Its historic production was at around 12 to 14 grams gold per ton equivalent. So about half of that was gold, half of that was silver, along with some lead and zinc. And so incredible logistics there. And we're going to be working on that one coming up shortly here. We're going to be doing a drill program on it. And we've done a lot of geophysics, and we think we have a good handle on how things are working there and where they're going. So we're really excited about that. And of course, the Schechtmans are shareholders in that as well. So you can look that up at www.stingerresources.com. And of course, for American Creek, it's just www.americancreek.com. And you can find everything that you need to do there, and contact me as well if you'd like.
Kelvin Burton, once again, thank you so much for your time today, and God bless.
Hey, thanks, Elijah. It's good to be with you.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.